Hello, everybody, and welcome to a massive video. So we have a couple different bits of news that we need to get onto, but we do want to look at what's going to happen and our price prediction for the end of this month. Because I'm going to just, come out and say something very quickly. I don't feel very good about this. I think 10% more down for the Nasdaq. I'll tell you exactly why. And also, I think that we might see Bitcoin drop a little bit further. So make sure you stay tuned. Also, hit the subscribe button to get more videos like this and our opinion. AJ, how are you today? And how was your weekend? Apart from Bitcoin being a bit.
Yeah, yeah, good. Thanks. Yeah, weekend was good. As you know, as you said, yeah, Bitcoin. It didn't really do much over the weekend. It was a very flat weekend for the crypto
Mhm.
market. That's obviously why we didn't go live. There was nothing to really report there at all. All we've really seen is the DXY continue to push over the course of the evening and this morning. So that's obviously not going to be good for the traditional market and the crypto markets. And I do think when the traditional market does finally open, I think we could see the effect of the DXY going up come into play with the traditional market, and we could potentially see another push towards the downside.
Yeah. And the thing is, guys, I'm actually seeing like the DXY affect me, like personally in my day-to-day life. But I'll go through that in a second because, I live in Dubai. And so usually I have an exchange rate in my head, but that's not the case at the moment. But anyway, I'm going to just jump into obviously crypto, as you mentioned there, AJ. There's not really been anything that's gone on over the weekend. Okay. Pretty stagnant, just a little
Yeah,
bit of movement to the downside, basically. So
yeah,
it's been relatively unsuccessful. One thing that I do think we should notice is obviously the Vassal hard fork happened for Cardano, and nothing really has come of this. It wasn't even a buy the rumor, but everybody still sold the news anyway, which is crazy. So obviously, that's brought Cardano down by around about that 4 to 5%. Now, I'm going to get into some of the news, but first things first, we need to talk about our friend Quan. Just want to kick this off. There's not really any news, but I think things are catching up for him quite rapidly, and it hasn't gone well, has it, AJ?
no, it hasn't.
No. So Do Kwon on the run. What a headline. Basically, there's been an Interpol has issued a worldwide arrest warrant. This, I believe, is the first person in mainstream media to have Interpol issue a worldwide arrest. Obviously, we know that South Korea did this, but South Korea issued an arrest warrant, but he doesn't live there. He lives in Singapore. So now it's kind of on the Singapore police to come and arrest this guy. So that's not good, but I wanted to just start with that. And again, feeding into this kind of negative outlook on the market at the moment, just looking at this over the 1 year period, this is the fear and greed index, as we all know and love. As everything was going up, everyone was excited. We were around these levels, and then the market started to crash, etc., etc. And so then, we find ourselves around about this level here. It's just a little bit depressing. We've been stuck in these levels for a very long time. And over the past week, we've just been in this kind of extreme fear type, mode. And I think because of this, we're beginning to see what was I wanted to show you. Bitcoin's key whale addresses holding their lowest amount of Bitcoin since April 2020. So this basically means all of the whales, well, most of the whales are selling off their Bitcoin because of this level of uncertainty. So maybe they are seeing a bit more downside for Bitcoin and looking to accumulate at these lower levels, probably around about that kind of 14, 15K level. If we go down to 12, then obviously they're going to be buying then. But it's interesting to see that Bitcoin whale addresses are actually holding the lowest amount. So maybe they know something we don't. They are actually selling this off, which is a little bit crazy. And obviously we haven't had this level of fear since the COVID crash. So we all know what happened there, and it really wasn't good. So this is something to keep into account. And this kind of, to be honest, has continued. It's continued to spread. We can look at this is digital asset flow from institutional investors. So these big institutions, this is where they were putting their money. So people were actually buying some Bitcoin. Ethereum, a lot of people buying the merge, obviously when it happened, everyone was like, oh, is something going to happen? But nothing really did. And so I think now we're seeing institutions take advantage of the staking model that Ethereum now can offer. So we see a little bit of money going into Bitcoin and Ethereum, but to be honest, just not really much at all. Month to date, we're down. And so, it's still this same picture. One thing that we should notice, though, guys, is Canada taking money out of crypto, US taking money out of crypto. But look at Germany, Sweden, Switzerland, Brazil. The focus here is very much on these European countries who their economy is really not doing well. And this is where I, personally, I'm quite affected, or, I've noticed it because obviously I'm from the UK, but I live in Dubai, and I'd always do a 5-to-1 conversion where I'd say, £1 is worth 5 dirhams. So if I see something for like 100 dirhams, I'm like, oh, that's £20. But now it's a 4-to-1 conversion because we're seeing, the dirham being pegged to the dollar, and we're seeing the pound drop by so much. It's actually insane. And so we're seeing a lot of uncertainty in Europe. And we'll touch on that a little bit more when we come to our economic calendar later. But like I said, Ethereum is seeing a little bit of push to the upside, which is fantastic. And people are using MEVs, maximal extracted value methods, to actually boost the amount of yield that they get from staking Ethereum. Plus, also, once more and more people are staking, more people are using the network, we should begin to see more fees being paid to the people who are staking. So this is another good thing. I'm just going to, I'll wrap up for now. I'll come back to Bitcoin analyst and why this might be a bear trap. But I'm just going to mention tech stocks facing a 10% drop as the dollar gets stronger. Now, the reason as to why, before I get into this, is that if we see tech stocks, if their earnings miss the expectations, obviously people will begin to sell. If a company's not making money, people sell it and they buy something else that is making money, or they hold cash. Now, this is the expectation. So with this in mind, will the NASDAQ hit 10,000 or 14,000 first? AJ, do you know what the current price of the NASDAQ is?
The current price of the NASDAQ is sat at $11,230 approximately.
There we go. So this is a question of, are we going to see, a 1,000-point drop for the NASDAQ, or are we going to see an increase? Now, retail investors are slightly more bearish. Institutional or professional investors are slightly more bullish. But there is an overwhelming percentage that basically says that, yes, guys, we are coming down. So we can all pretty much agree that there's more downside in store for the NASDAQ, which obviously correlated massively with Bitcoin. And whenever we see the DXY go up, we see the NASDAQ and Bitcoin come down. So AJ, should we have a look at the DXY at the moment and see what whether we should be extremely fearful or just slightly fearful?
Yeah. First, I just wanted to bring up the British pound against the US dollar, because you did mention that we are at an all-time low since 1984. I think 1985, 1984 was the last time we were this low on the British pound versus the dollar. So not looking too good for the pound at the moment.
No, it's really not. No, and that's there's a few news stories. Obviously, the government are going crazy. They're like, "Hey, Bank of England, like let's do something." What's going on? Have you noticed anything living in the UK, AJ?
To be honest, it's just the food is really expensive. I know that's all to do with inflation. That's and then obviously we've got the petrol. It is extremely expensive at the moment as well. I know that's come down a little bit, but food is a massive one. And food is very, very expensive. Energy bills very, very expensive. I know my energy bill's 3 times the amount it normally is. So it's not looking good. And obviously right now is a time where you want to have your expenses at the lowest point, as at the lowest possible point, because you want to be having as much cash available to be investing when the markets do have that potential next leg down. So it's not good for investors really, because it is very expensive to live here at the moment, and yeah, it doesn't look like it's going to get any better anytime soon.
Yeah, I was going to say also because I think with the fact that energy you import, and obviously in the UK a lot of food is also imported, and if
Yeah,
you're importing and you have a weak currency, that's going to make the food more expensive. So yeah, obviously you're going to be feeling that. But the likes of the US dollar, for example, they can sell their products and get much higher, or many more pounds if people from the UK are importing it, for example, because obviously the pound is so weak. So it's a good position to be in if you are the dollar, but.
yeah.
Unfortunately, you're not AJ, and now you're paying £400 for a pint of milk.
Almost, yeah.
Yeah.
But yeah, it's getting very expensive. But yeah, looking at the dollar, we can see that the dollar is continuing to push towards the upside. I did say all the way back here, if we stayed above the support level, we would most likely come up to the $112 level approximately. And we smashed through that. We came all the way up to almost 115. We came up to 114.5. Saw a little pullback, but we are today seeing that push as well. Currently sat at 113.6 approximately. So the dollar pushing towards the upside, as we know, is really, really not good for the traditional market and the crypto market. You can see over the course of 2022, we have been in this massive, massive uptrend on the DXY. And as we know, Bitcoin, we've been in this massive, massive downtrend over the course of this year. So it's very evident there that when the DXY goes up, we see Bitcoin come down. And if we continue to see the DXY push towards the upside, we are most likely going to see Bitcoin continue towards the downside. Now, what are the next levels that we are looking at for the DXY? Well, the next level I would be looking at is this potential $120 level. Now, if we came up to 120, then the likelihood of it is that Bitcoin would drop have another big drop towards the downside, potentially down to that target at 12,000. We don't know how low it could go. But if we do stay above this $112 level on the DXY, I do think it's pretty likely that we could come up to 120, because that is the next major resistance that is coming in. So we do have to be aware of that. Now, we could see the price come back down and maybe test that $112 level, or we could see a little increase before retesting that level, because we are in this very, very big uptrend. And what we do tend to see, if I just get this tool out here, is if we start from here, we have the high, we have a low, we have a higher high. Get rid of that. We have the higher high, and then we have a higher low, higher high, higher low, another higher high, higher low, and then we're forming a higher high. So we're most likely going to form another higher low before potentially having that next push towards the upside, which could take us all the way up to that 100 and continue and take us up to that $120 level. So we're still in this massive, massive uptrend on the DXY. And right now, there are no signs that are signaling to me that we are going to see a trend reversal. So for me right now, I do think we are going to continue forming these higher highs and higher lows, potentially bringing us up to the $120 level, unless we form some sort of trend reversal pattern, or if we do break maybe a previous higher low, let's say this one here at approximately $108. So right now, I don't see anything technically wise that we are going to stop this push towards the upside. So for me right now, it looks like the DXY is most likely going to continue to push towards the upside.
Yeah, it is just exactly looking like that. And so if we have a look on the Bitcoin chart here, obviously
Yeah.
we're down around about these lower, kind of, they're not new lows, but they're very dangerous levels for us to be around. And typically we've always bounced off them, haven't we? But it doesn't look that way anymore.
Of course, yeah. So on this daily chart here, we do have this major level of support. Obviously, we've had this slight fake out here. Let's get rid of the magnet. We've had this slight fake out here, and then we sort of broke back above the support, and now we're testing the support again. So we haven't respected it properly. But it is a major level. You can see we've had so much support at this level. If we were to get sort of a bigger break towards the downside and that continuation and sort of confirmed break towards the downside, then I do think we are going to see much lower for Bitcoin. But yeah, this level is a major level. It's approximate $19,000 level, sort of between the 18,700 and 19,200 ish dollar level. As you know, we've spent so much time at these levels, so much time around this $19,000 level. As I said, you know, spent time here, spent time here, spent time here, spent time here, and we've spent a lot of time recently at these levels. So it's very evident that it is a very strong support level. And yeah, if we do lose this level, it is not looking good for Bitcoin. And with the DXY continuing to push towards the upside, the likelihood of it is that a break towards the downside is more likely than to hold this level right now. And sort of the main thing that I am looking at on a sort of bigger time frame level is the weekly chart. So we have this major support on the weekly. Now a breakdown of this would, for me, signal that 12,000 is most likely that next target. Of course, on the lower time frames, we're going to have those support levels, but on this weekly chart, there is just no support, and I would expect the price to just come down to 12,000. We're also seeing the S&P 500. Last week, yes. So Friday, we didn't actually get that close below this previous low here. We actually managed to hold it, but we could potentially see this break towards the downside this week if we do see the DXY continue to push towards the upside. Obviously, when the DXY pushes towards the upside, the traditional market does push towards the downside as well. So does Bitcoin. So yeah, if we do break this, then the next level I would be looking at for the S&P 500 would be around $3,230. If that happens, if we saw the price come down to that level, we would most likely see Bitcoin come down to the lower levels as well, and most likely break this weekly support right here as well. So not looking too good in the overall market.
No, you're absolutely.
Bonds are
Sorry.
continuing towards the upside as well.
Yeah, no, and I just wanted to add something in there. So just mentioning about the DXY and also the S&P 500, what I've brought up here is the economic calendar for this week. So just to add in a little bit of context to what it was that you were saying there, AJ, is that we can see, okay, this week, so tomorrow, not, durable goods orders month over month. This is just kind of, a bit of an idea. We get a consumer confidence. This is going to be like a little bit of an influence, but I would say not so much this week than what it would perhaps usually be, because all eyes are going to be on the end of the week, 30th of September. We just have a crazy amount of data coming out. Also, I guess, from the 29th as well. So later on this week, I think we're going to see the DXY push massively to the upside. Even if GDP comes in as, let's say, negative, I still think people are going to be holding, well, obviously more cash, but also the dollar in specific, because we have inflation coming out. So this is uncertainty in Germany. What's the inflation in Germany? And then we have, which I will say, expected to grow, if you notice this. And then we have a look at India interest rate decision. This is their Fed, basically. India's Fed are coming out, and that they're going to have their interest rate decision. We have GDP growth from the UK. We have, which is expected to massively slow down, I will say. We have inflation coming out in France. We have unemployment in Germany. We have core inflation for the Euro area, the Eurozone, as I like to call it. Italy, you have inflation. So again, if you are a holder of the euro, it seems like a very risky time given all of this data that's coming out, from the likes of France, Germany, overall euro, and also Italy. So this is something that I think, we do need to have a look at. And if you are an investor in the euro, you're probably going to be holding the dollar. Now, I will say, because we have inflation from Germany, Germany is the biggest contributor to the Eurozone economy. So it might be that this gives us a little bit of indication as to this. But essentially, inflation is still going up in the Eurozone, which means, it's running up. So it's not under control just yet. Things are going to get worse before they get better. So why hold the euro? And that's the reason why I don't think too many people will.
Yeah.
But we do also have the core PCE price index coming out from the US as well. So this is not quite inflation, it's not CPI, but it's core personal consumption expenditure price index, which is quite a lot. But basically, it's a measure of the prices paid by people for domestic goods and services. So not this is the core, obviously. So it's a little bit like CPI, but not quite CPI. So yeah, this is I think what we need to look out for. There's going to be a lot of uncertainty, a lot of volatility, but with all of this uncertainty, I don't think people are going to be jumping into the likes of the Nasdaq or even Bitcoin. So it does make me a little bit bearish. And like I said, along with the likes of the whales might be knowing something that we don't. I think adding to what you've just said there, AJ, it doesn't paint a good picture, especially when we're at these really key levels of support here for the likes of the Nasdaq and also the SP 500.
It doesn't, no. And even to add on to that as well, retail investors, they make up a lot of the market. They are a big part of all of the markets, and retail investors who don't really understand what happens in say the DXY does actually affect what happens in the traditional markets and the crypto market. A lot of retail investors don't understand that because maybe they're not educated enough to understand that yet. But they are going to be looking at the DXY, they're going to be looking at the dollar and seeing that increase. And in their heads, they're going to be thinking, what's the point of investing when the dollar is doing so well? A lot of people in America are going to be thinking that, what's the point of investing when the dollar is doing so well, when my cash is the strongest that it can be? Since 2001. So they're going to think in their minds, there's no point in me investing when the markets are going down and the dollar's going up. But what they don't realize is that it's the best time to be investing right now because the dollar is not going to continue to is not going to continue to push towards the upside. It is going to establish a top at some point and it is going to come back down. And that's where we are going to see the traditional market and the crypto markets push towards the upside. Where the top will be, we don't know. But I do think that the top for the DXY could be close, and it's the same with the bottom for crypto. I do think we're getting very, very close to that. I don't think it will go any more than 90% down. We're already approximately 75% down. Previous bear markets, the maximum we've ever gone down on a previous one of the in the last 3 bear markets is 86%, and I wouldn't expect us to go any more than that, really, especially over 90%. So for me, I think we are very, very close. Maybe another 10% until we establish that bottom. Right now the best thing to be doing is dollar cost averaging because we don't know where the bottom is for the Bitcoin chart for Bitcoin, and we don't know where the top is for the DXY. But when we get there, we're not even going to know it either. So
you are right, and another 10% down from the highs. So the high was what, 70K? Let's just say, rounding up. And that's 7K off of the current price, and the current price is what, 18, high 18s. So that brings us to almost 12K. As a 90%, that would be the price target there. I've just done the math in my head there, so it could be off. But yeah, so it could be a little bit more. And one thing I thought that was quite good that you mentioned was how retail does make up quite a lot of volume, and at the moment, if they're not looking and they're just going endlessly long on certain assets, we are seeing quite a lot of people getting liquidated. This is on CoinGlass. It's just the liquidation data for different trades over the past certain time period. And so looking at this 4 hourly, you still see there's 6 million that have just been liquidated so far. $6 million, I should say. Which has just been liquidated. And one thing is, you mentioned there that we will probably see a little bit more downside, but I wanted to show you something that I looked at earlier, and I might not be, I think it was this, but basically everyone's now sniffing around a housing market crash. So obviously we know the UK sell-off, we saw this, and this is to do with bonds, doesn't really affect the crypto market, so I didn't mention it, but basically, the 10-year yields are they're getting pretty hammered, should we say? So that as the yield, or sorry, as the yield goes up, the price goes down for a bond. But the housing downturn, so the US is expecting a housing crash coming sometime soon. Now, if you remember, me and AJ mentioned this a couple months ago because there's always a lagging indicator for housing. So if housing does begin to crash, the benefit in kind of the medium term is that if housing crashes, obviously that feeds into CPI data, into core inflation data. And if that begins to fall, then rents will fall, and then therefore CPI and everything will kind of come down. And so we might then be in a good position early stage of next year for a bit of a pump. But this is one thing I wanted to mention to you there is that, we do have to now look at not only a stock market crash and a crypto market crash, but there's probably going to be a housing crash as well. And so this can kind of go one or two ways. People can see it as a lagging indicator and say, look, actually, we're now in a better place, even though the housing market is crashing. So things are on the turn up, or everyone just panics and, doesn't take that into account. And then just nobody buys anything. So there's two different ways that I think, that could go. But I agree, mate. We are really, really close to a bottom in the crypto market.
Definitely, yeah,
Smell it.
and yeah, it's the scent is getting strong. But
Yeah,
this is the perfect time for those who maybe are just getting into crypto. This is the best time to be getting into the market and riding it through to the bull market. And for me, I fortunately got in sort of within a bear market. It wasn't a real bear market, it was a COVID crash. And for me, it did really, really help, even though I didn't really know what I was doing when I first started investing. It did really help because it did push my portfolio up when we did eventually come back to that bull market, and that bull market continued. I wouldn't call it a proper bear market because it was just the COVID crash, but the best time to be investing it is right now. The best time to be investing is within a bear market. And not a lot of people think that. People think, they like to FOMO in when the market's going up, and a lot of people, they tend to buy at the top, or they tend to buy at a higher high, and then it goes to a lower high, and they think, oh no, it's going to crash even further, so they sell, and then it goes up again, and they buy at an even higher price. But bottom of the bear, close to the bottom of the bear markets are the best entry points for your portfolios. So right now, all I'm doing, and I'm sure Ben is as well, is just dollar cost averaging. Whenever the price goes lower, just dollar cost averaging.
Yeah, because that's it. Like you said, you can't predict the exact bottom, so all you can do is just try and get as close to it as possible. And the best way to do that is just keep putting money in. Anything that you have, just like well, not financial advice, not anything you have. Make sure you have money to pay rent and stuff. But like this is what I'm doing is kind of looking for different areas where I can just add a little bit more in, and then also a little bit of money on the side for a trading portfolio, because there's two different ways in which you enter the markets. One is more long term, DCA, and then trading. That's something that I want to be able to take advantage of when we start seeing those moves to the upside, because I know you've done okay off of that in the past with trading. It can be quite effective if done right.
Yeah, definitely. Only if it's done right.
Yeah, exactly.
The thing is, with trading as well, you can actually trade in such a way where you flip a coin and you just go long and short, but you have to time risk management literally to the dollar. You have to make sure that your risk management is on point, and you can literally. I've heard of traders, then they just flip a coin, and wherever it lands on, heads and tails, they go long or short. But because their risk management is so intact, they do end up making money. Now, I would not suggest that at all. It's not something I would do at all. But yeah, risk management is a very big part of it, and that just sort of proves that how risk management is a very big part of it.
Did you hear about that hamster? There was like a hamster that I think it was like a German hamster, and like it would just choose to go long or short on like to certain cryptos, and I think it beat the market by like 30% or something ridiculous. But then I think it died. Let me hamster crypto trading. This is so weird. What am I doing? Why am I
It
searching
is
this?
possible to just flip a coin. You just have to make sure your risk management
Yeah,
is there.
Mr. Gox. Let me show you. Let me show you my screen. I don't know if I don't know if you guys have seen this. If you haven't, this is just a nice way to end the video. Just I'm talking about Mr. Gox, the crypto trading hamster has died. Ah, sad day. Good old Mr. Gox. But he outperformed human investors basically. Where I think they gave him a treat, and he'd go on to buy or sell. There's a video of him as well. But he basically did really well. So after his final day trading on 22nd of November, his portfolio was up 19.7% and had made about 98 euros profit. There you go. He's probably better than most people than most people trading today.
Yeah.
This was his little trading setup.
But yeah,
Good.
all that would have been was that's exactly the same scenario as flipping a coin and just having that risk management in place.
Yeah, exactly. That is it. If you have good risk management, you can do anything. But yeah, Cyprian is absolutely correct. Dollar euphoric,
Yeah.
stocks down, real estate about to go down, crypto down. So
And
if you now is genuinely, it is one of the best times to
yeah,
really just begin, isn't it?
investing.
Because it
And
can only
the
fingers crossed.
housing market as well, that is so overpriced at the moment. And even I know it's not really a big part of investing, but the car market as well. The car market is incredibly overpriced at the moment.
Yeah,
Secondhand cars are incredibly expensive. I know that's a completely different reason why, but
yeah,
everything is so overextended right now that a pullback is just needed, and then
yeah.
hopefully eventually that will push up the riskier assets.
Yeah, no, you're absolutely right. And the car market. I think the reason was that production numbers were down by so much
Yeah,
because of the chip shortage, the global chip shortage, and that's chips that go into computers and obviously cars, etc.
yeah.
So nothing obviously to do with potato chips. Those little the circuit board things. Those were just crazy, and I think a lot of those pressures maybe have eased or will ease. But now we have the new issue, and a part of that is because of China. But now we have a new issue of China, essentially just their whole economy just crashing. Here's something. Everyone was worried about the default of Evergrande in 2021. I think it was September 2021 or something. But there's a Chinese real estate, and so the defaults from Chinese real estate companies on the debt that they have to pay, it's been more in the first half of 2022 than it was in all of 2021. And this is where everyone was like, "Oh God, how real estate market's going to crash." And so now, just the first half of 2022 alone, they've had more defaults, which does really paint a picture that they're pretty much ruined because GDP 30% is linked to real estate in China, and everyone's at the banks. They built tanks to go to banks and deal with protesters. You guys are pretty crazy. So yeah, I think a massive big recession. I think the only reason why we might not have a crash is because obviously China can just control everybody.
Yeah.
So they might, that might have an impact, but bottom line is it's really not good. And I think this is why this global uncertainty feeding that dollar and obviously pushing everybody out of risky assets like crypto.
Yeah.
But there we go. All right. Well, look, guys, we're going to head off. Hope you enjoyed the stream. Like the video, as always. Aikeshi, number one guy. Here we go. Help out the algorithm. Hit the like button.
I'm sure those are emojis next to it, but the
Yeah,
comment section doesn't really.
thanks, Doc. I want to see what that is. Is it like a doctor? Like a little, thanks, doctor.
I don't know. It might be a
But
thumbs up. I'm guessing it's a thumbs up. I don't
good.
know.
Okay. Thank you very much, guys. We will see you tomorrow.
Yeah. Thank you, guys. See you tomorrow.
Smash the like button.